Uphold adds instant crypto-backed loans via Exactly protocol. Uphold has launched instant crypto-backed loans, letting account holders borrow against their holdings rather than selling them. The company announced the feature on July 31st, 2026, and said the loans run through Exactly protocol, an on-chain lending market on Optimism. The pitch is straightforward. Instead of selling Bitcoin or Ether to raise cash, a user pledges those assets as collateral and receives a loan against them. The original position stays intact, so holders keep their upside if prices rise and avoid a disposal that, in many jurisdictions, would count as a taxable event. The mechanics Uphold disclosed, and what it left out. The announcement is thin on the numbers that decide whether a loan like this is worth taking. Uphold did not publish a loan-to-value ratio, an interest rate, a list of eligible collateral assets, or the countries where the product is available. Those are the terms that separate a useful credit line from an expensive one, and readers should wait for them before drawing conclusions about cost. Exactly protocol runs fixed-rate and variable-rate lending pools on-chain, which suggests the borrowing cost will track pool utilization rather than a flat house rate Uphold sets itself. That is a meaningful design choice. Variable rates can climb when demand for a given asset spikes, so the headline cost at sign-up is not a cost guaranteed for the life of the loan. The link to the Uphold card. For anyone already spending through the Uphold card, the loan product opens a second liquidity path. Rather than topping up a card balance by selling crypto, a holder could borrow against it and spend the borrowed funds, keeping the collateral in place. That appeals to long-term holders who want to fund everyday purchases through the Uphold Essential card without unwinding a position they intend to keep for years. The trade-off is liquidation risk. Every crypto-backed loan carries a threshold. If the collateral's value drops far enough, the protocol sells it to cover the debt. A borrower who pledges a volatile asset to fund stablecoin spending can end up forced out of that asset at the worst possible moment. Borrowing against crypto is not free money, and the tax deferral it offers only holds if the position survives the loan. Uphold's push toward DeFi rails. Uphold has been widening its product set beyond simple buy, sell, and spend. Adding an on-chain settled loan product signals a move toward the DeFi rails that fintech rivals have started routing through, rather than building in-house. Whether it lands with users depends entirely on the terms Uphold has yet to publish.